Hello and welcome to Invest with Rules. It's Scott Bennett and Mike Olafson. It's December 27th. It's Friday. You've made it through the holiday week. Happy holidays to you and to your family. We have a really fun topic. So you can see Wall Street's 2025 S&P targets from major investment firms. Let's dive into that. And before we do, I think it's kind of fun. Let's go back in the time machine. So roughly around this time last year, 2024 targets. So back in the time machine we'll go in the time capsule. The price on the S&P 500, the index, or let's say the futures, was around 4,800. And we got a lot of analysis from lots of different firms. So you had the low from JP Morgan, then at 4,200, you get Morgan Stanley at 4,500. They were expecting a calamity. And then you kind of zoom all the way to the bottom and you see Knightsbridge at 5,200, BMO at 5,100, Deutsche Bank at 5,100, and lo and behold, the market's at 6,000. Mike, what do we think about some of these price targets?
Just goes to show you, Scott, that we don't predict. Nobody can predict what's going to happen in the markets. This is proof.
I can predict one thing is that when I'm visiting family in Chicago, where I am currently in the suburbs, there will be dogs barking, there will be a creepy background. That's it. That's it.
Well, if it makes you feel any better, Scott, I can't hear the dogs, so I'm guessing that we all can't hear the dogs. So that's the good news.
It's like that video. It's like who let the dogs out? It's crazy over here. All right. So I saw this article from Forbes and it was here's how Wall Street expects the S&P 500 to perform in 2025. So now we're going to forward. So we know that these expectations typically are positive, typically single to double digit, because what they're doing is they're trying their best to take all the companies in the S&P 500, project their earnings, and they say this is what we think the price will be. But what actually happens, no one knows. So I saw this chart on the internet and I thought it was interesting. I tried to give people credit, but I couldn't even find it. But you can kind of see how the S&P 500 is extended from this trend line starting in 2020, which was the COVID crash. And you've tested it in 2022 during the bear market. And we've just kind of rocketed. But the beauty of the market is the market could continue to rocket up and out for years before it ever does, if it ever does, come and test this trend line. So most major banks make their third year, this call for the third consecutive year of strong returns for the S&P 500. So the beauty is we're back at it again. They love this stuff, and the consumer does too. So we're at about 6,000 on the S&P 500, and let's go over some of these expectations. And again, if you need, the slides are in the members area. You have Bank of America, you have BMO, you have UBS. I'm going to show you a chart that it's a little bit laid out prettier. And then there's Ed Yardeni. He's on CNBC once in a while. He leads the targets of 2025. He gives 7,000. There's probably someone out there who's even more bullish. You have Goldman Sachs and Morgan Stanley holding up the rear at call it 6,500. But you can see they're suggesting an index rising about 8.9%, 8.89. Yardeni goes up 17%, so expecting not one but two but 3 years of sizable returns from Ed Yardeni's research. Mike, what do? We do something very simple. We follow the trend because these people, as much as they're bright and they have beautiful expectations, the market can make them look foolish at any moment.
Yeah, investing on predictions is a recipe for disaster.
And very simply, we follow the trend, we follow big money, we follow risk management rules. Because what if we do get something like that? If we
Mhm.
get something like that, that would be awfully painful. That looks to me somewhere in the neighborhood of about a 30% correction. That would be pretty hard for most people to stomach. So 30% doesn't sound terrible, but if you were to take your portfolio and subtract 30% over the next year and a half, a year, that'd be pretty tough to stomach if that money just disappeared and you didn't get to enjoy it. So, what I want to do today is just simply cover the stock market score. We'll run through the live sheet. So, I think the main summary, if we want to summarize, is predictions are interesting, predictions are really exciting, but who knows? I think that's just kind of the beauty of the stock market is it's a voting machine. It goes based on earnings. These people were really wrong last year, so the odds of them being wrong again this year are pretty high. Any final comments before we move to the live sheet?
Well, yeah. In fact, here's how I'll segue us into what's going on in the market today is the Santa Claus rally. Love to hear your comments on this, Scott. But so far, Santa Claus has given us coal in the stockings. So, even though there is a predictable Santa Claus rally, look what's happening now. Who knows? It may still come about. But what are your thoughts on the Santa Claus rally, Scott?
Well, according to the stock market almanac, it comes on the 24th. And in theory, the people who are what we call tax loss harvesting or tax selling, most of that's done by now. So
Yep.
in theory, you can sell a stock at a loss, take the loss on your taxes. If you then you can offset other gains in your life or gains in your portfolio, or at the worst, you can lower your taxable income by $3,000 if you live here in the United States. That's tax loss harvesting. We do that in our advisory service. We take small losses, we like large gains, we let them run. So innately what we're doing is tax loss harvesting. But the major difference that we do is if the market does have a calamity, a big major downturn, we well we value preservation more than taxes because what's the worst thing that could possibly happen is you make tons of money and you're so afraid of taxes and then you lose and then you don't have a tax problem, you have a principal problem. Your tax problem never even happened because you didn't even take taxes and then the profits disappeared. That happens to a lot of people in a lot of bear markets. But Santa Claus, it's like no one
Who,
knows. It's like
who
in
knows?
theory, who
Exactly.
knows? It's like it could happen, it may not. In theory, there's like the very start of January is typically pretty fruitful. The very end of December is pretty fruitful. No one knows. And I think that's the beauty of the market is there's a bunch of catalysts. And today it could be a million stories. I'd probably say the one that hit me the hardest was the bond market stinks. It's really been lousy for almost 3 years. So if you take a step back in your portfolio and you have a huge bond portfolio or you have a huge international stock portfolio, this has been a pretty rough 3 years. And following the trend would have helped you prevent that. So the 10-year treasury yield is about 4.6. So the Fed's tried to lower rate 3 times, but if you're trying to go refinance your mortgage, it was a little bit better, but not significantly better. So I would say the whole purpose of this is to try your best to block out some of the huge noise in the market. And that's what we do is we have a mechanism to use math and use data to follow trends. Mike, any other final thoughts?
Yeah, yeah. And if I recall correctly, Scott, and gut check me here, and we can go to the trade log and confirm, not now, but I'm just saying in general that I think a couple of times we made some money on bonds this year by once again following the trend. We took advantage of a short-term type of uptrend, jumped on it, made some money, and moved out. Is that kind of your recollection as well?
Yeah, we had one trade that was like 10% plus, and we think
There
we
you
had
go. Yeah,
one trade that was maybe 1 or 2% down. But over collectively, we're positive in bonds for
yeah,
the year when the bond market is down for the year. And why is that?
exactly.
In a downtrend, you have these reversion kind of snapback rallies, and we caught a snapback rally, and that's how we were playing it. But moving more towards a more of a strength minded portfolio, it's less likely. That's why we don't own bonds at all. There is no strength
Yeah.
in fixed income today. We are currently, as I'm looking at the live sheet this morning, we're wavering as the market actually opened up fine and then kind of sunk, probably based on a million pieces of data. But the stock market score is hovering between a 5 and a 6. It's kind of bouncing. It's probably back at a 6 if I were to look live at the second.
It is. There you go. It is a six. There you
Yeah,
go.
and that's totally normal. We're judging the US market, large cap, tech, small cap, international, and small caps came under pressure, international came under pressure, and that's kind of weighing it down. And by far and away, our largest position, which we'll get to in a second, are the Nasdaq as the tech stocks, which are under a little bit of pressure today. But you could see our exposure off to the right. You could see our portfolio heat off to the right, which is kind of our risk to our stops. We'll go into more of that. We kind of hit it twice, so we'll maybe hit more of that in 2025. But very mathematically, it's like, okay, well, what did you buy something at? What's your stop loss? And then what's the current price? And we're just judging current price to your stop loss. So if everything hit your stop loss and everything got wiped out, what would your portfolio loss be? And most people don't know that. So I think, and most people buy and hold, and they really don't know that. So, and that's where the unknown and the uncertainty gets pretty scary in bad times. Happy New Year. happy holidays. Definitely take some time off this weekend. Enjoy your time with your friends, your family, away from the screens. Hopefully this video is helpful. hello@investwithrules.com. Mike, final thoughts.
Thanks for being a member, and especially the new members. Thank you very much for jumping on board the Inner Circle. Look forward to having a great 2025 with you.
Yeah, it's going to be a fun ride. And I mean, really, the reality of life, is the way I think of it, is super simple. One idea makes up for the membership cost. That's one idea. That's it. And one rule can help you lose less than the membership cost. And then the rest is gravy. And can we give you, hopefully over the course of 12 months, just like a bunch of really great data that helps you get closer to your goals? That would make us insanely happy to help you get results. That's really important to us in 2025. All right. Again, have a great weekend. Happy New Year coming up. Talk to you soon. Bye-bye.
Happy New Year.
I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.